2025 is going to be a challenging year for people in the housing market, but unlike the pandemic years where things were challenging just for home buyers who were struggling to get into a property, 2025 is going to be difficult whether you're buying or selling a home. That's because inventory remains low. Although it's been building over the past few months as we round out 2024, it's still low on a historical basis, which means there aren't many opportunities for home buyers out there, right? There aren't many homes on the market. Now, at the same time, mortgage rates remain high. Now, they've come down from the 7% peak that we saw in November, but they're still up from the 5.75% rates that we saw in early September of this year. And I expect more volatility as we move through 2025. The reason why I'm harping on mortgage rates and inventory is because I believe these are the two variables to watch most closely as you make your home buying and home selling decisions. I do think mortgage rates will come down as we continue through 2025 here, but it's not going to be a straight shot down as we saw at the end of 2024, right? Mortgage rates dropped in September, but then they spiked back up to finish out the year. Now, the 10-year Treasury is trending down. Mortgage rates are trending down. And I do think they're going to continue to come down, but it's not going to be a straight shot. And inventory is rising. It continues to build year over year as less people can afford to purchase properties. But that being said, we're still a long way from pre-pandemic levels of inventory. I do think inventory is going to at least stay at these levels, but we could see it continue to rise as we move into 2025. So we're going to talk about all that as well as some predictions from Zillow and other real estate media companies out there to help you make the best home purchase or home sale decision that you can. So before we get into it, my name is Liam O'Reilly. I'm a realtor here in Vermont with Jerry Riley Real Estate. If you have any real estate needs, whether it's in Vermont or anywhere else, reach out to me directly and I would be happy to help you. So we're going to switch over here. The first thing that I wanted to take a look at is what is the housing market doing right now? So what we're looking at is this is Redfin's weekly market update. This is as of November 27th. So I'm recording this on December 4th. It's a little old, about a week old here, but it gives you a good snapshot for what the housing market is doing. We see median sales prices up 7% year over year. There's usually a seasonal decline in the median sales price right now as less people are listing their homes, less people are moving in the winter months, days are shorter, but we're not seeing that this year. We're seeing home prices actually rise month over month and remain relatively stable with a 7% increase year over year. So home prices are staying stable, and that's because even though mortgage rates are higher, there's not much inventory out there on the market, right? When we take a look here, this is the Federal Reserve's active listing count. We can see that inventory is up. It's increased significantly. Now, this data is from October, so it lags even further than Redfin's data, but it gives you a good idea of where inventory is. So it has been climbing towards the end of 2024 here, but we're still well below pre-pandemic levels. If we take a look at October 2019, we see that there were about 1.2 million properties on the market. And right now, according to the Federal Reserve, there's not even a million single family homes or condos on the market. So we're well below, about 300,000 to 400,000 homes under where we need to be to get back to 2019 levels. Now, at the same time, we are seeing more homes hit the market, and we're seeing more properties stay on the market. We see new listings of homes for sale are up 11% year over year. We can see it's still clustered around these pandemic lows. So it's not like a ton of properties are hitting the market, but there are still more homes coming to the market than we saw this time last year. And more of those properties are sitting on the market. 12% increase in active homes for sale, which is what we were just talking about in this chart. So there's more homes on the market this time than there were this time last year or at any point over the past 4 years, which is a welcome sign to the housing market. And things are shifting. They're shifting across the country. Not as many homes are selling for over list price. Not as many properties are getting multiple offers. More homes are sitting on the market. This is a good thing if you're a home buyer out there. And part of the reason why homes are sitting on the market for longer is because of these mortgage rates. We see here the 30-year fixed rate mortgage sits at 6.5%. So not as high as the 7% rates that we saw in November, but still significantly higher than what we saw in September and certainly what we saw during the pandemic. I do think these are going to come down. Mortgage rates are going to drop, which will bring more buyers into the housing market, right? Rent is still very high. And we take a look at what Zillow is predicting here. They think that right now is probably the best time to find a rental, right? This is just nationally speaking, more multifamily properties, more multifamily construction was completed this year than at any point within the past 50 years. It says it right here, more multifamily units are hitting the market than any time over the past 50 years, which is pushing some large property managers to make concessions in order to get their units filled. Now, that backlog of multifamily construction is completing at the end of 2025, and we're not likely to see as many vacancies moving through 2025 and into 2026. So because of that, there's going to be more pressure on rents, which if we think about the housing market as a whole, right? If people aren't buying properties, a lot of the people that can't afford to buy, they're renting, right? So if more pressure builds in rents and rents continue to increase, things become more competitive in the rental market, we should see more people move into the home buying market, right? That's a pressure towards more buyers. Now, if we see rates come down further, maybe to at around the mid 5%, I think we will see, I think around 5.5% is when we'll see more home buyers jump into the market. So buyers could get pushed from both sides into the housing market. And yes, there is more inventory. Yes, the housing market is better than where it was before, but things could change quickly depending on how quickly rates drop. So we'll have to pay attention to that moving throughout the year. Now, just to be clear, I don't think we're going to see any craziness like we saw in 2021 or 2022, where there were 10 offers on almost every property out there. But what I am saying is that, yes, right now the housing market is slowing, and there are signs that it could continue that way, where interest rates and prices are just too unaffordable and people can't afford to buy properties. But there are also scenarios where home buyers jump back into the housing market. And of course, there were a lot of people predicting doom and gloom for this year. At some points, I was predicting trouble for the housing market. And I don't think, conditions certainly aren't as ripe as they were the past few years, but we have not seen that median sales price drop. And the biggest reason for that is because of inventory. Inventory is likely to remain, maybe it hits this 2019 number, but it's likely to remain gridlocked as many people have low mortgage rates, right? They've locked into an affordable housing payment. And because of that, it's difficult for them to accept a higher interest rate, a higher home price, and a higher monthly payment than where they are now. People are going to hang on to their homes. And although we might see similarities in the economy to what happened in 2007, I don't think we are entering a foreclosure crisis like we saw back in the great financial crisis in 2007 that caused home prices to drop significantly across the country. So looking into what people are saying 2025 will be like, they say here, Americans embrace small home living. So what they're predicting is that more of the properties built in the United States will be smaller than what we've seen throughout the past decade or two. And this is because obviously things aren't as affordable as they used to be. People can't afford to buy McMansions like they could in the early 2000s or even throughout the 2010s. Now things are much less affordable. So what Zillow's predicting is the size of new construction will decrease, and they're predicting that there will be more buyers markets out there throughout 2025. Now, when we take a look at what they deem as a buyer's market, we see here that most of Florida is considered a buyer's market right now, where buyers have the advantage. Some parts of Kentucky, Tennessee, Texas are also in that zone, right? Buyers have more leverage than sellers. There's other markets which are more neutral, right? Some parts of Texas, Oklahoma City, Denver, these are more neutral markets. And then when we take a look towards the Northeast, we see that Washington, D.C., Boston, Buffalo, these are considered sellers markets, and then New York and actually Buffalo as well are considered strong sellers markets where sellers still have a significant advantage over buyers. So it's not, even though we're talking about the national housing market here, you really have to understand the local market that you are shopping in, because where you are, if you're shopping in New York City, things are going to behave much differently than if you're shopping in Miami, Florida. Now, when we take a look at Fast Company, this is another real estate publication, And I think they made some very interesting points as to what could happen in the housing market. So they talk about demographic shifts and labor market dynamics here. They're saying slower immigration could reduce housing demand, right? If there's less people coming into the country, that's more homes for the people that are already here, which might give way to rental pressures that we're experiencing or that we could experience in 2025. But at the same time, deportation policies could severely reduce the construction workforce, leading to higher costs and accelerated adaptation or accelerated adoption of technological solutions. So they're talking about 3D printed homes and just cheaper ways to bring homes to the market with less labor. Now, I don't think that's going to move significantly, but I could see it happen. I could see a world where we see more 3D printed homes and more cost-effective ways to bring housing to the market, which ultimately, if houses are cheaper, especially new construction, that's good for everybody. So one more thing that I wanted to mention here is they talk about the interest rate volatility, and so does Zillow. Zillow talks about how mortgage rates will fall and then rise and then fall again. And so does Fast Company, right? It's not going to be a straight shot down to the bottom when it comes to mortgage rates. Mortgage rates are going to go down, then they're going to pop back up again, then they might go down again. It's going to be volatile. And so if you're a home buyer out there, being able to time when mortgage rates drop will be a big advantage for you. And mortgage rates, if you've been paying attention to the Federal Reserve and their rate cuts, mortgage rates do not follow the Federal Reserve. So watching the 10-year Treasury, which we can see has been trending down. If I pop back over here, the 10-year Treasury was down today, a little over 3 basis points. It is down significantly from the peak that we saw at the end of November at about 4.43%. So the 10-year Treasury is dropping, which is what's causing mortgage rates to drop. So this is really what you need to be paying attention to, right? Right around here was the Fed hadn't cut their rates yet. The 10-year Treasury was still low. The Fed hadn't cut their rates. Then they cut their rates and boom, we see this spike. The 10-year Treasury starts to spike. Then they cut again in November. And it still doesn't impact the 10-year Treasury, doesn't impact mortgage rates. So what you need to do is you need to follow this 10-year Treasury. We're going to be covering it on this channel. So you'll know if now is a good time to buy based on where rates are, or if rates have peaked and maybe you should consider a adjustable rate mortgage product that can be easily refinanced once rates drop lower. So anyway, I hope you folks found this video useful. This is what I think is going to happen in 2025. Again, I think more volatility. It's going to be challenging. Homes aren't going to sell as quickly as they did in 2021 and 2022, and mortgage rates are higher, making things challenging for both home buyers and home sellers out there. And there's a few ways the housing market could go. We could see rates remain high, which puts pressure on home prices. We could see more homes hitting the market and inventory start to build. Again, all putting pressure on home prices, turning things into more of a buyer's market. But if we see rents become even less affordable than where they are now, and we see mortgage rates drop, we could see a significant increase in home buyers in the market. I do think there's a lot of people waiting on the sidelines, waiting for things to become more affordable, so they can eventually buy their home, move into a bigger space, and have that dream of home ownership that so many Americans have. So let me know what you guys think. I love reading your comments. Thank you for watching, and I'll see you in the next video.